Monday the 16th of December, which I believe means it's the last full week before Christmas. I'm looking at the US dollar index. So this chart goes back to the beginning of last year, 2018, so it's about 2 years old. I'm going to open it up now and show you how the dollar index is really breaking down. We've broken below the 100-day moving average, the 200-day moving average. 100-day moving average is starting to turn negative. We've also broken below the 23.6% fib, which is at 96.97, or we had done. We've managed a recovery, but the fact that we broke down is concerning. We have held a trend line that goes back to January of this year, so that is significant, and it has held. But I've got to say that I think pressures are building to the downside. We did get a little bit oversold, so I guess that's why we bounced off this trend line. If I had to bet whether we would break back above the 200-day moving average or break down below this trend line at 96.70, I would bet that we will break below the trend line rather than back up. However, this obviously will act as resistance, and if we do get back up through 97.70, well, it would all be pretty boring really, because we'd run into this resistance up at 98, 10, 15, and we'd remain stuck in this horrible sideways trend, which is very difficult to trade. So I think I'd rather see a move to the downside anyway. A break below 96, call it 96.60, 96.59 was the low. Then that should give us some decent moves to the downside, with 96.00 really as the first target. Now, it really is tricky at the moment. Aussie versus the US dollar, really going to have, you kind of got to place your bets and decide which way you think the market will go. Or wait until we've got clear confirmation, but obviously miss part of the move. There's nothing else you can do it right now. A trend line going back to December of last year, so this trend line is a year old. We're just hovering above it, almost hovering above it, hovering on it really, I guess. We broke above it decisively on Thursday, but Friday we came down to retest it. So now the question is, do we hold above this trend line? 68.80, 68.70 is where we have to hold above, and then we need to get back up through 69.10, which is the 200-day moving average, which I thought we'd done on Friday, but we reversed back down. So it's all a little bit confusing. Again, I think I'd like to bet on the fact that we do hold this and we do break up, but we have got some obstacles at 68, 69.10, and then this trend line, which is only 2.5 months old, but that'll be around 69.50 by the time we get there. Now, obviously it did hold the last time, but I don't think this is going to hold forever. It's not a particularly significant trend line. New Zealand dollar breaking higher. It's been a fairly slow, painful rally, but we had a little bit bull flag here, and then we've gone up again. Tricky again Friday, a good run up, and then a close near the open leaves us with a doji, which isn't the most positive thing, but I'm going to stick with the bulls on this. I know we're overbought, but I'm going to stick with the bulls. I think we will stick with the trend. You can see why we paused there. We've got a confluence of fib resistance around 66.50, 66.60, so we topped just below there. So this is causing us problems, but I don't see a sell signal, so I wouldn't really want to be short yet. Potential US dollar weakness against the Japanese yen as I open up this weekly chart and show you how we have a trend line going back from the end of November. So again, a year-old trend line, which is coinciding with 200-week, 100-week moving average resistance. We've clipped that 3 times in reverse now, so the weekly chart is certainly looking negative, with the overbought stochastic starting to turn down. On the daily chart, again, we've got 500-day moving average, the green line, which held perfectly the little move up on Friday. So my feeling is that we will go lower. We'd have to clear 110, decisively clear 110 before I would change my mind on that. Looking like we can test support down at 108.90, 108.80 with a break below 108.70, adding to pressure on the downside. Euro dollar, absolutely horrible last week, caught me out twice. The break above the trend line going back to August and the 200-day moving average triggering a buy signal for me, and then we gave up all the gains and collapsed back below these 2 important resistance levels. So I'm absolutely lost now. We've got 38.2% fib resistance at 111.42. We've got that trend line at 111.34, and we've got the 200-day moving average at 111, call it 111.50. So we've kind of got that 15 pip range of resistance. Yeah, and as I say, I thought we'd beaten it. I thought that was a nice buy signal, and I was happy to buy it on the retreat back to what I saw as a support level, but we've just sunk below it now. So quite honestly, I'm lost. This has been a horrible market to trade for quite a long time. No clear direction, no clear trend to follow, and I guess I'm just going to have to give up on that one for a while. US dollar versus the Canadian is a bit more interesting. We have a trend line going back to the end of 2017, so it's at least 2 years old, and we've got a 23.6% fib down here at 31.42. Now then, when I open this, you can see that this is a very, very good support level, this trend line. And when I open this chart up, you will see how we have tested and held that trend line perfectly, coupled with the 23.6% fib support, as I say there. So this is absolutely key. Buying into longs here seems worth it, especially as we start heading into oversold territory, looking for a bounce up to 132.00, which we had already seen on Friday. And then 132.30, we start getting up to towards 133.00. There is resistance there, but we'll worry about that when we get there. If we break down below 131.40, then this is going to look, well, 131.30. We've got the 500-day moving average just approaching 131.30. Then that would be significantly negative, because of course we would have decisively broken this trend line. We've got the 200-week moving average down at 130.75, so that would be the first target, but I'm not sure if that would hold now. Gold remains in a bull flag. We've been in a bull flag for an awfully long time, but we did spot that a while ago, and I did warn that we could stay in this bull flag for a significant period of time. So I can't really do much within this bull flag. This is what I would call no man's land when we're trading in between the two trend lines. What is key is going to be the resistance around the 1488, 1490 area. So it's worth selling into a short there, seeing if we remain in this slightly negative channel, but be prepared to then reverse and buy on a break above, say, 114.92, because that would be a very, very strong buy signal. That would be the completion of the bull flag and would signal significant upside potential. The daily chart has a clear trend line, which we are hugging very tightly, which comes in at around 117.00, 117.05 for this week. So a break above 117.10 would be should be a significant buy signal. We are just about what you could call a bull trend, I suppose, when you look at this weekly chart. We've also held the 200-week moving average, which I had as a buying opportunity in recent weeks, and that certainly has worked well if you're holding longs from down there. So obviously, as long as we hold above 1650, things are looking good. A break below 1640 would look negative. And obviously a break above 1710, as I've said, is also another buy signal. If you are watching this and you're not a subscriber, I do often release these videos a little bit late for non-subscribers to have a look at. There you go. This is a new website that I've finally launched. It took me all summer to launch it, but I'm very happy with it. Please place a visit at daytradeideas.co.uk, and you can see all the subscriptions we have on offer, which should help you significantly build your account through next year. All the products that we have for sale are on the subscription page.